From CRI Simple Numbers, this is Profitability Playbook, the Simple Numbers Podcast, a podcast for those championing market growth and anchoring the nation's economy, small businesses, and entrepreneurs.
Hey there, welcome to another episode of the Simple Numbers Profitability Playbook Podcast. I'm Mike Maxson, that's Brandon Gray, and here we are bright and early on a Monday morning. You ready to go?
I'm ready. Hey, we got a great week ahead of us. Memorial Day's next week. You know, hard to believe, but May's coming to an end. You got high school graduations going on. You got the end of school, at least here in the South. End of school is pretty much upon us. So we got a changing of the seasons. It's about summertime.
Hey, I don't know if you've had this, but my kids, right, come the last week of school. Now, the teachers don't put this out. No one puts this out, but apparently they just start telling me, I don't need to go.
Oh, yeah, completely.
I don't need to go. I mean, yeah, it's like, they're just like, hey, I don't need to go. I go, but every time we've done this, I get the absent notifications and all that. But here I got a 10-year-old over here arguing with me about how he doesn't need to go to school, and then followed by his sister. And then the high school one's easy. They just have testing and it's one done. But yeah, the only one's a 7-year-old. She has no clue. But my middle two, yeah, they're just, I don't got to go anymore. I'm like, wow, that must be nice to just up and decide that. I don't know about you, man, but when I was younger, we went the whole time right up until like the last day.
I don't know what we're teaching about finishing, which is a topic for another day.
Yep. Anyways, well, look, we were going to do like a media mash segment today, but I'm looking through and perusing the articles, and I'm just like, man, so much was geared towards around a lot of just the macro side of things, or was it just a lot about the little guy? So I thought I'd do a fun one, and we all do this. So I was like, you know what? Chat GPT. What is the top 10 things business owners want to talk about right now in the current U.S. political and economic environment? And this was good for two reasons. One, I just got a whole host of topics, but two is the, hey, how does this relate to like what we hear? And, Brandon and I talk a lot about, topics that we're hearing every day from the business owners that we work with that call to want to work with us and things like that. Other business coaches we talk to. So this gave me a wow, even Chat GPT is aligned on what everyone is saying. So it was good to see that, that we're all speaking the same language here. So Brandon, if you can believe it, number one on the list, can you guess?
Inflation.
Yes, there it is. Inflation and rising operating costs. Here's what it says that is getting hit the most that business owners are dealing with: payroll, health insurance, rent, utilities, raw materials, and you ain't going to believe this, after paying $4.14 for gas this morning, freight and fuel. So that's what they're up against. So Brandon, take it away, man. What do we got? How do we fix it? How do we deal with it?
It is what it is. I mean, to a large degree, there's when you break those down, how many of those items are in your control? So rent, unless you're going to change locations, probably not too much in your control. Health insurance, well, you can shop it, and you're seeing, especially if you've got 100 or more employees, a little bit more attention being put to self-insured type plans. You might can move the needle a little bit, but if really the only big lever you have is to change the portion you cover or your team, well, that's a direct change to compensation. So that one's probably not substantially in your control. Fuel prices. I mean, some folks buy in bulk. Some folks have a little bit of a hedge if you're a heavy fuel user. But generally speaking, if you got a fleet of vehicles, it kind of is what it is. Y'all probably know where I'm going with all this. Labor's in your control. Now, the market for labor, you have to pay a market wage, but the output you get from your labor is definitely in your control. And so in an environment that is is high inflation, and I believe it's here to stay. We've seen this since 2021. We're 5 years into it. It's not going anywhere. It's going to continue to move. And the only place it's going to move is up. You have to be rock solid when it comes to operational efficiency. And we had David McClaskey, who's been on our podcast before. We had him on last month with our Simple Numbers community model members, going through the importance of operational efficiency. The margin of error is just extremely slim. And in the past, we would mask it by being able to go out and increase prices. It's like, hey, fuel's up, health insurance is up, rent's up, yada, yada. Let's increase prices 10%. Well, like we've talked about in previous episodes, you don't ignore that. You want to look into the market. But I'm telling you, for a lot of folks, the market is just not in a position to absorb a price increase. You either got to get better or you get broke. There's only two options there. I mean, you're either going to see a decline in profitability or you're going to increase operational output. So where are your weaknesses at? What do we got to change in order to operate more efficiently? Meaning I get more gross margin for every dollar I spend in labor, and tackle them. That's the only solution that we see right now. Mike, thoughts from you?
No, that's exactly it. And I mean, I think that more than ever, training of your team members, so the ability to bring in junior level or associate level, whatever you want to call it, entry level, whatever it is, your ability to get them in, train them, and get them productive is, I think, more paramount than ever. Because we get to a point, and Brandon and I have not debated, but gone back and forth on this, where there just becomes a point where you just can't cut labor anymore from a body standpoint. You just have to have a certain amount of bodies, but you can cut how the dollars are allocated. And so, hey, instead of having a $200,000 employee, can I get by with two employees that total $150,000? Now the skill set might be less, however, but if you have a good training program in place, maybe they can be as efficient as the $200,000 person and save you $50K there, right? That's just a basic example. But I think what's often overlooked in a lot of organizations, when things are going good, they think it might always stay that way, and they never take the time and invest money into a training program. And some of the best companies I work with have the best training programs for getting in new labor and getting them up to speed quickly. Wow, you ain't going to believe this. Number 2 is labor quality and workforce availability.
All right. So
I was staring at that as I was answering it,
All right. I mean,
so some of it says, well, hold on a second though, before it says business owners report difficulties with recruiting qualified talent, retaining high performers, managing wage expectations, and addressing productivity concerns. I swear to God, we just hit all that on number 1.
But here's the deal too. All right, Mike, do you remember what your parents said about us when we were kids? That we didn't know how good we had it. They had it so much tougher. That's all you heard. And what are we telling our kids? Hey, you don't know how good you have it. We just talked about school, like going to your very, right? Okay.
Yeah.
I've been doing this for 22 years. I can't recall a time in which that was not a top issue. And as long as there's people there, that issue is going to be there. And I think it's more of the paradigm that you're looking at it for. We could go back to 1985, and I guarantee if you had the same amount of questions, you had the same questions out to entrepreneurs, you know what they're going to say? Quality and expectations of the team and finding good team members. I mean, that's just a given in any market. It's nothing new. And the reason why is because it's hard. You just look at what you're trying to achieve, the number of folks who are in alignment with that vision, who are dedicated and committed to it, and then managing all of that. I mean, it's just hard. Managing it's hard. And so you've got to embrace hard. And back to what you said earlier about training, it is paramount, and managing expectations. What we see with the best who do these things really, really well. It's kind of like buying, if you're going to buy and sell, all the money's always made on what? The buy. Well, it comes this way with your team. Great teams are formed through great hiring. That's the key. And, you can read 1,000 books on it. There's best practices on it. You're going to swing and miss from time to time. It just kind of is what it is. Identifying when you have taken a swing and that you missed, moving on very quickly, training, like we mentioned. And the other thing that I think is it's fairly well known, but folks just don't do it. You have to over communicate expectations, and you have to have a pulse on what's going on inside your company. And so we're big fans. All of our team leads have a monthly check-in with every team member. And it's pretty basic. It takes 10 to maybe 15 minutes. And I'll credit Rob Simons for this. So Rob gave us years ago kind of the agenda. And it's changed a little bit since then. But for the most part, a majority of it stayed the same. So what is, since we last spoke, here's the agenda. What is your personal high? What's going great in your life? What is your professional high? What's going great at work? What is your personal low? What is your professional low? What is one thing that me as your manager, leader, whatever you want to call it, can help you with? And then what are up to 3 top tasks, either professionally or personally, that you want to accomplish between now and next time we talk? And that cadence has allowed us very easily, and many of our clients as well, to have a quick check-in, determine, you get a feel for where they're at. You get an idea of the challenges that they're facing. You can address those, coach them up. And then if you've got something that they need to improve upon, you go over it then. Don't wait till the semi-annual or even worse, the annual review to go, hey, you've been doing a really bad job for like 11 months. Well, that would have been good to know 10 months ago, right? The other thing is, this is a Greg Crabtree quote. You ready? You can't have accountability without expectations. So for every person on your team, have you clearly defined what is expected of them? And if you haven't, it's really hard to hold them accountable. We'll take sales, for example. Rarely are we coming across a client right now that we're like, man, we got sales problems. We just selling so much, we don't know what to do. It's the other end, right? It's, what do we got to do? Well, I'm a firm believer that the success when it comes to the sales of your company is found in the daily agenda of your sales and marketing team. So have you set forth what the expectations are on a daily basis for that team? Whether it's outbound phone calls, lunches, dinners, appointments, meetings, follow-ups, you name it. You've got to have very clear expectations. And that goes for everyone in the organization, not just sales. I'm using them as an example. If you have that, you have the check-in, you hire well, you're never going to get out from under the constant challenge, but it's going to be a lot easier.
Yeah. And I think one of the things that, we often overlook in all of this is just sort of the intentional devotion to all of that. Like, it needs to be like the weekly check-in, the monthly check-in. Man, I mean, we know this, man. We get busy. It's like one of the first things you put off, or you put by the wayside, like, oh, I'm busy, I can't meet right now. A funny thing is there's something that's like billing. People do that with billing. Like, oh man, I'm so busy, I can't get my billing done. And just like with checking in on, everything with the labor. I mean, in most, especially if you're a service-based business, I mean, business is people. So I mean, I'm gonna tell you right now, most businesses, it's your biggest lever. It's your most important lever. It's your most important driver. And rarely, if you ask business owners, do they bring it up? Is there like, oh, hey, that's my number one thing, addressing it on a weekly or monthly basis. But you'll have people being like, oh man, we're buying too many diet sodas. It's like, what about the labor, And so
first you're paying
pay attention to.
Yeah.
Yeah, right. Yeah. All right. Third one. This is dangerous for me and Brandon. Brandon's probably a little more dangerous than me. I just openly admit, like, I'm sort of dangerous. Tax and potential tax policy changes. Brandon, I still remember the days when you did tax returns.
I tried to forget those.
Those are fun.
Yeah. So, you know what we should do,
So,
Mike? We should do an episode, and
what?
we would probably all be the only two who would enjoy it. But the history of simple numbers, and
Oh yeah.
Mike
Oh
is
yeah.
right. There was a day to where I did a ton of tax work, and that was probably not good for anyone. I know it wasn't good for me, but yeah, taxes. Well, I mean, this one, okay. I've kind of been a little skeptical over here, right? I've been beating up on the concerns. I mean, 40% of what you earn is leaving. It's going to taxes. So
Yup.
it is one that you should give some attention to. Now, that being said, how much attention am I going to give it? And at what cost does that attention come at? What if I'm spending time on this, I'm not spending time on something else. And so, we many times have been labeled as supporters of the IRS, fans of the IRS. We just want you to pay more in taxes. And that's not the case. More so, the reality of the situation is that there are very, very, very few things that a business that's under 500 million in revenue, and I doubt there's anyone listening today who's over 500 million in revenue. There's very few levers that you can legally pull that are going to make a noticeable difference. Okay. Now there's a handful out there that will, you can save 1,000 here, 1,000 there, 2 or 3,000 here, and you add it up, and you go, okay, I got my taxes down by 15, 25, $30,000, which is great. Don't get me wrong. Okay. It's good. But keep in mind that comes at a cost, not only from an attention perspective, but also you've got to look at, just like anything else, the cost benefit of what I'm doing. Okay. So let me give you an example of what I'm saying about all this. You can go online and you can type in tax advice for entrepreneurs, tax savings for entrepreneurs, and there are going to be about 1,000 YouTube videos pop up. And I'm not saying they're not great and not things that you want to look at, but I think you got to look at it with eyes wide open in terms of the cost. So let me give you an example of one. We're going to pay our kids. I'm going to pay my spouse. Okay. So, and kind of the hack behind that is basically, you don't have a filing requirement up to a certain level of threshold. I can't remember what it is, maybe like 8,000, 10,000 bucks, something like that. And so you can pay them, the business deducts it, they don't have to file a tax return. So by the way, I'm not giving tax advice and full disclosure, but that's just generally kind of the concept around how it works. Well, okay. On the surface, that looks easy, but in practicality, is it? Depending upon your legal structure or your tax structure, legal structure, and what have you, it may require you to set up a separate partnership that employs those people. The business plays the partnership. Now I've got an extra tax return I have to file. I've got extra tax prep fees. I've got calls and meetings and what have you with my accountant. They've got research they have to do. And let's just say you look at it and you do all of it and you save $5,000 in taxes. And then you get a bill from your tax preparer for $2,500 to prepare the return and have the meetings with you. So you save $2,500. But was it worth it? Maybe, maybe not. I mean, you just got to look at the entire situation and go, okay, I spent 8 hours trying to make this happen. Was that worth my time? So that's just kind of one example. I mean, there's a handful of others. For example, one of my favorites, I was in Augusta, Georgia with Vistage Groups last month. Well, guess what? Everybody in Augusta, you know what they do when the Masters rolls into town? They rent out their primary home. Okay. So there's a certain number of days and a certain amount that you can rent your residence out for without having to file that or claim that as income, called the Augusta rule. Really easy to do. So, if you're an entrepreneur, maybe especially a smaller company, and you've got a pretty nice place, you're going to host an executive team meeting there instead of going to a hotel. Well, what's the market rate for that day? You can get a check for it. The business gets the deduction. So once again, it's a tax savings, but it's not massive. And here's the other thing that I'm about to get off of my stump and quit preaching, Mike. So here's the last thing.
I'm just listening. I'm taking it in.
We've been on this before, but I do think, it's something we need to remind everyone else. Make sure you get an understanding of what are tax savings versus tax deferral. Okay. Those are two different animals. And I'm not saying that I'm against tax defer. Okay. So I'll give you a perfect example. retirement plan. Okay, you put money in your 401k, into a pension plan or what have you. You don't pay tax on it today. Okay, great. Down the road, you're going to pay tax on that. So you haven't saved taxes, and it may come across and be marketed as tax savings. You have deferred taxes, and I'm fine with that. Just go into it with eyes wide open. And lastly, I see this more so attorneys, doctors, other folks in the medical profession, dentists. Not to say it's not present in other places, but those are the most popular ones. Be really careful about a retirement or defined benefit plan in which you put a ton of capital into strictly to defer taxes. Okay. So I'm going to give you an example of this. I've worked with a group of attorneys in the past. They had one set up, not a bad thing necessarily, but they were taking just about all of their profit every year and putting it into this retirement account. And they thought it was great because they're like, hey, we don't have to pay tax on this money. It's tax deferred. That's a win-win. And I'm going to get it later. I'm building up, diversify my wealth. Okay. That's not bad necessarily. Here was the problem. They had no cash. We couldn't market. We couldn't go and hire people. We couldn't expand. We couldn't change facilities. You name it. We had no cash because all of the cash was being stripped out of the business in order to defer taxes. So was that a good investment? Well, if they left it in their business, they would have got a 50% return on that cash that they left in their business. Instead, they put it into a defined benefit plan where they got 8%. So just go into it eyes wide open.
Yeah, I'm with you. I mean, it's about tax management in the end. I mean, I don't think, as someone who gets a K-1 and has to do the estimated payments and everything like that, I mean, I just plan for those estimates. I plan for that. Obviously, I want to get the lowest deal, but in the same time, like, it's just easier at first to plan the management of around it than anything, right? Like, that just seems to me the easier thing to do to get ready, and then let the tax professional try to work the deal,
Have a plan. Stay on top of it. You don't want to ignore it. Like I said, it's 40% of what you earn, 30%, depending upon where you live. It's a lot of money. And so have a plan, kind of know what it looks like. But the mistake I'm trying to keep people from avoiding is don't step over dollars to pick up dimes. And I've seen it to where, I got an entrepreneur whose business is running at 10% to gross margin, and they should be 20% of gross margin. And they're not spending time pulling the levers inside the business to get it there because they're more worried about how am I going to pay my kid to be a model for my company.
Right. Yeah. All right. Okay. The next, and by the way, Brandon, I think we're gonna have to do 2 parts on this. This is actually makes me happy because we got some good stuff here. The next one, I don't think it needs to take too long on this one. I would like to get 5 in today. The next one's economic and political uncertainty. Let me give you my take on this one. Again, back to what Brandon said of control. Can you really control if we want to bomb Iran that weekend? I mean, you can't. I mean, there's really nothing you can do about it. And so, how you handle and navigate that. But election outcomes, regulatory changes, geopolitical conflicts, trade policy shifts, that does create a level of uncertainty. But I truly believe that a lot of the problems around that stuff, just with the other things, comes around having a plan within your organization and focusing on efficiency, being able to be very nimble within your business as those things change. For example, I had a client that the tariffs got put in, they were immediately going to be impacted, and I'm talking within a few days, a shift to another vendor in another country. And it was that fast. Because why? Because they have someone on top of it. They're efficient. They're constantly looking at it and monitoring it. And I know everyone's not maybe in that spot, but I think it's more about, just like taxes, around the tax management and the planning. Same goes for economic and political uncertainty. It's going to happen. So don't run your business that's reliant on the best decision some politician's going to make, because they don't care. So that's my take on it, Brandon.
Mike, you're right. I mean, there's not a lot that you can control with economic uncertainty, but what you can control is how much capital you have. So the folks that are the most concerned whenever uncertainty hits are the ones without cash, because that can wreck your world. So it's one of the reasons why we're just advocates that, hey, you need to keep that core capital or buffer capital balance where it should be, because things are going to happen. You wake up in the morning, we bombed somebody, something's changed. You never know. And so if you keep your core capital where it belongs, then you're like, okay, I've got time to adjust.
Yeah, absolutely. And that's going to go into number 5 here, because here's number 5 is interest rates and access to capital. And so, in simple numbers, we've always been advocates of 2 months of core capital, right? That's 2 months of OpEx plus direct labor. One, it gives you some buffer if should a bad time ever happen. But another thing too, it gives you some buffer to make a move when maybe other people can. And so if you're part of an industry where lots of people, don't have access to capital because they haven't been playing the game right, and you got cash, you're going to be able to do things that they can't do. And so the interest rates can't control them, but how you can do it, I think, aligns right with what Brandon said is hey, having your own stash in place to make a move in the market.
Yeah, and I would recommend once a quarter having lunch with your banker and a prospective bank. Once a quarter. You're going to get really good information of what's going on in the marketplace from them. You're going to expand relationships because banks are squirrely creatures right now. You got one bank who won't loan you a red cent. You got another bank who will roll out the red carpet for you. So I need to make sure that at all times I'm active in that marketplace. It's a free lunch if nothing else, because they'll pay for it. So just ping them, reporter, go out to lunch.
Hey, great piece of advice there, Brandon. free lunch and banking information. Can't beat that. You heard it here first, folks. All right. Well, we knocked out 5 of them, so we'll have 5 more in the next episode to run through some of the challenges y'all are facing out there. And not only we're seeing, but confirmed by ChatGPT. So it's been good for us to give a quick rundown of all of these and making sure we're keeping everyone apprised on some of the goods, bads, and uglies regarding this. So, Brandon, before we go, you got anything?
As always, Simple Number Summit, November 9th through 11th, Austin, Texas. Podcast discount code is podcast26. Go to simplenumbersummit.com and register. We talked a lot about that on the previous episode. If you haven't registered, you need to go ahead. It's filling up, so make sure you get a seat.
Yeah, we'd love to have you there. So please show up. It's going to be a great time. Lots of great speakers. Yours truly will be there. Can't beat that. I guess Greg will be too, and some other people, but really, I'm the show. Hey, I'm waiting for Brandon. Here it comes. All right, everyone. For Brandon, I'm Mike, and we'll catch you next week.
If you want to know more about driving sustainable profitability for your business or are interested in learning more about CRI Simple Numbers, please visit our website at simplenumberscri.com. Thanks for listening to this episode of Profitability Playbook, the Simple Numbers Podcast. You can subscribe to Profitability Playbook on Spotify, Apple Podcasts, or wherever you prefer to listen to podcasts. If you like what you heard today, please leave us a review. This podcast is brought to you by CRI Simple Numbers LLC, a division of CRI Capital Group LLC, and a subsidiary of CRI Advisors LLC. CRI is the trusted brand under which Carr, Riggs & Ingram LLC, the CPA firm, and CRI Advisors LLC, along with its subsidiaries, deliver professional services. Please note, Carr, Riggs & Ingram LLC is a licensed independent CPA firm offering attest services, whereas CRI Advisors LLC and its subsidiaries specialize in providing tax and business consulting services. These entities operate within an alternative practice structure as defined by the AICPA Code of Professional Conduct and comply fully with applicable laws, regulations, and professional standards. Ready to simplify your business finances and drive growth? Explore valuable resources, books, and tools designed for entrepreneurs and small businesses at simplenumberscri.com.